Yeah, Wednesday. What's up, everybody? Wednesday morning. Hope everybody's having a great day. Welcome to today's edition of the Daily Market Commentary. I am your host, Chuck Fulkerson, as we are about to roll into the markets and do what we do each and every day, identifying 10 to 12 futures markets from an educational perspective, looking for both breakout and reversal opportunities. If you're new to the channel, do me a favor, click the subscribe button, hit the notification bell so you get the alerts and the updates as we do this. All right, let's go ahead and roll in. S&P this morning up 32, NASDAQ up 94. Oil is up $1.68, but you know, we got to make sure we're looking at the right contracts. And gold is up a little bit as well. So looking at the S&P, we had a down day yesterday. Not overly surprised that we came down yesterday. We've actually, on our 4-hour time period, have now put in a lower swing low in this position, and then we're lower on our swing high as well. So it's okay to be a seller if a good opportunity shows itself. Now, we did come into a potential breakdown area yesterday, but we didn't really get quality basing in front of that breakdown area. Which then brought us to our 15-minute confirmation long area, and it didn't really give us an entry on that either. So yesterday was one of those days where there just wasn't a whole lot to do in the S&P. If you are an options seller, I think you may get an opportunity today to sell against the SPX. For those of you that sell one-day options, and now as we're getting a little bit of a rally up, we've rallied up since about midnight, with a bit of a rally from the European markets, but not above any of our major swings as of yet. So I would want to see what happens at about this area of supply, although this level here is a very clean supply level just below this pivot. Now, not a great time of day that this level was formed. It's 28.14 by 23.23. And so definitely not going to be, you know, kind of the most ideal opportunity. We do have a little bit of a demand area down in here, which is above this 2750 kind of breakout point that we had earlier. So what I'm going to do now is remove that level and go ahead and look at this on the 1-hour time period. And the 1-hour time period obviously is going to be my more important time period. So looking at the 1 hour, we have this little tweezer top area right in here that we may come into today. So keep an eye on that for a potential reversal point. You know, and coming back down. And it's also a whole round number there at 2,800. Now, there is a chance that level's not going to hold, and if we get basing in front of the level, that will invalidate that trade. As far as demand goes, looking at our areas of demand, you know, I've got this 2,700 is an important kind of line in the sand, if you will, because it's below the last swing. And so if we get below there, we've got some demand down here. But the demand down here that we have would switch to a confirmation entry because we would be in an official downtrend at that point. All right. Next would be the NASDAQ. So in the NASDAQ, very similar picture. Neither one of our confirmation entries gave us a reason to get in yesterday as we sold off right in the beginning of the day. And then now we've rallied back up here just a bit, coming back up into this area here where we have this big kind of spinning top candle. Now this spinning top candle wound up breaking off to the downside, and it's a U.S. market open time of the day. So when I kind of zoom in on there, we can see that we're coming off of that level a little bit right now. Looking at the NASDAQ on my 4-hour, we came below its prior swing low as well. And so that 4-hour level that I'm looking at is this area right in here, which is where we broke down from. So if we come back up in here, I wouldn't be surprised to see a reversal just above that 8,600 level. So keep that area in mind today. And now we move on to, we'll call him the star of the show, which is crude oil. So crude oil has absolutely just fallen apart lately. And the thing to remember about crude oil is that when looking at crude, most brokerage firms are not allowing us to trade the front month contract. So if I just look at in thinkorswim/CL, the message I got yesterday, and I think this also came through in TradeStation and I think in Interactive Brokers, is that only closing orders are allowed on the front month contract, which is the June. And currently, the June contract is trading at $11.36, whereas the the July contract is trading at $19.93. So there's a significant difference between the front month contract and just 1 month out. I mean, when you look at that, it's frankly almost double the price. And then if you go out to, say, the December contract and trading the Z, you're up at $28. So when we look at all these contracts being of different value, what you're essentially looking at is the cost of storage, right? And when I'm looking at the CLM, which is our June contract, since we're not really allowed in most brokerages to open a new position, we certainly aren't going to analyze that one. And if I look at the CLN, which is our July contract, that would probably be the one that I want to take the most look at. However, I'll just be quite honest. I just don't think it makes sense to look to trade oil in these market conditions. This is not a position where you want to get caught with your proverbial pants down, right? I think that the big fear for traders in this instance is that you get into a situation where you're unable to exit the position and your losses exceed the value of the position. So my highest and strongest recommendation is, if you're not comfortable inside of the crude oil markets and really don't understand everything about it, then you probably shouldn't be trading it, especially in these market conditions, because your stop losses, although we've not seen a lot of gaps in crude oil, so your stop losses should still be valid. The other thing I would say is, if you do want to trade it, looking out at the July may not be enough. You may want to go a bit farther out. So I guess the question now would be, what exactly should I trade and how do I do it? Well, if you go to the CME's website, so go to cmegroup.com, you can navigate your way to trading the crude oil contracts and really what you're looking for. So if I go to the crude oil contracts, I can go and look at the calendar. And when I look at the calendar, this will tell you which contracts you can take a look at. So when we're looking at these, the M would be our front month contract that most people are trading as of today. But then you certainly have the N, which is the July, the Q, which is the August, the U, which is the 20. What I'm going to do today is look at the U contract. I think the U contract, which gets us out to September. If it's something that you want to trade, go out a little bit further. By the way, this also gives you all of the contract specifications of each individual contract, as well as speaking on some of the circuit breakers. So if you are fairly new to futures, if you've maybe taken a futures class on charting futures, but you don't understand what futures are, why not go to the source in order to learn a bit more about it? So just a thought, not a bad place to go, so that you understand everything around it. So if I go out here and look at the U contract, that's where I'm going to go to, because I think that's the one that probably is far enough out that it makes sense. And so if you wanted to look at this today, I think that you've got the makings of an interesting little double bottom here. But I'm not willing to be a buyer until I get a higher swing high and a higher swing low on the 4 hour, which we haven't gotten in a really long time. When we looked at this on Sunday night, a lot of our Traders Army members traded the gap and go trade and made a big move all the way down. We've rallied back up to this little area of supply and are starting to fall off. Now, I will say this: if we can get through this area of supply and there's basing in front of this region, you may have an opportunity for price to run up a little bit. Now, the inability for traders to open the front month contract, I'm not sure if that's really going to have enough impact for price to continue to rally on here. But I'm going all the way out to the Septembers, and looking at the Septembers, you do have this little, kind of double bottom pattern forming. You may get a little bit of noise up off of this piece. I think you're better off taking the retest in case that we do. If I go to a smaller time period, like say the 15-minute chart, you've got a decent little pivot right in here for a potential reversal on a confirmation entry for a long. So those are the levels that I think make the most sense if you want to trade it. The other thing that I would say is don't force it. And I think that you certainly don't want to get caught in a position where you can't get out. All right. Next, looking at gold. Inside of our gold markets, gold was a little bit frustrating yesterday in that we didn't get our a strong move on the breakdown. We got a little bit of a move on the breakdown, a little bit of basing here, broke down into our demand area. We then hit our demand area and rallied right back up. The best trade of the day was the retest back to this fair price value area to get long and then catch this run up that we had in the overnight. And then in the overnight, we got about a 2-to-1 move off of our supply level. So all of our levels were effective yesterday. But if I just look at what gold has done since then, none of those trades held for very big moves. So this one here was the shortest move down into our demand area. Our demand area held for a very strong move up, and then our supply area for just this little bit. So now what am I looking at? I got to remove basically all of those levels. So I feel like I'm starting from scratch almost when you do that. And my 4-hour chart, I do have this higher swing high, but I don't have a higher swing low as of yet. And so looking at this, if you want to give this a go, you've got a potential reversal right in here. This would put in our higher swing low if price comes back and retest that 1700 level. And I think a decent target area would be this wick over wick level that we have right up in here at 1740. All right, moving over to bonds and currency markets. So in our ZN level, we can see that we had a nice little move off of our 15-minute zone yesterday. Got about a 2-to-1 move away from there, and then it kind of sold off and broke through. As the market has shown strength, the bonds have come down, and we've come back down off of those levels. I don't, you've got a little demand area here, but I don't see any quality demand until we come to this little wick over wick down here on the hourly chart. Technically, you could maybe get a little bit of a basing breakdown below this area here, but then I've got this area of demand there that could stop it. I don't have room to roam. So for now, I think it makes sense just to hold off and not look to any of these positions because this is a fairly tight range anyway. When I move over to the Aussie, so inside of our Aussie position, we did get a little bit of a breakdown here in the Aussie right at the level where we had anticipated, and then it immediately popped back up just above a level and then kind of went nowhere for a while before then coming into our supply level and popping through there in the overnight sessions right as the Australian markets opened up. So now, I've got to clear all of those areas out, and I think now we're just in a sideways price pattern that tells me I'd be better off to sit on the sidelines and wait. Unfortunately, and this I am on a 4-hour still getting lower swing lows and lower swing highs, so being a seller still makes more sense. But I don't have any quality levels that I want to lean on right now. It looks like we've got a rollover right through here, but we could also pop right beyond there. So in a sideways price action, I think it makes sense just to hold off and wait for price to come into a more quality zone, a more quality level. In the euro, in between as well. So you're going to see this. You're going to hear me repeat this a couple of times. The euro is in between those areas as well, as we've got two breakout levels. 79.67 and 92.29, both of them there set up for potential breakouts, provided that I get the basing. Canadian dollar, we got a nice little drop off of our 15-minute level yesterday, and then it hit it a couple of times before then breaking in the overnight. Little bit of potential breakout area above here, as we are getting a bit of basing. But you'd have to keep the stop fairly tight. If you don't like the breakout, you have a little wick over wick area here, I think, that could be effective. Now, it's already been tested once by the red candle right next to it, and so it needs to switch to a confirmation entry on a secondary retest. Great British Pound and Japanese Yen, looking at these two markets, we see a very similar price action to the others, although the pound has rallied up, coming very close to our supply level. The downside of this supply level up here, while this is a quality zone, is that we're getting, this candle here, and then this one here tells me that we're going to get a little bit of basing before the level. Basing before the level, as everybody knows, is what I call the kiss of death, and the kiss of death before a level is not something that I want to really play around with. I try to make it sound dire and desperate, and hopefully you stay away from it. But when I go to a 15-minute chart, we have a little level here. I think we could see a reversal if price comes back into this area. and then look for this as as still a potential reversal, but just watch for basing in front. And then the Japanese yen looks like our other couple of other breakout potential markets as we're waiting on price to come into that breakout area. We do have a potential breakout area below here, as we keep kind of putting these breakout trades in. It's not as clean, I think, as the one up above, but we could certainly break out in here as well. But remember, in a 4-hour sideways price action, it gets a heck of a lot harder to trade any breakouts or really any trades at all. And so it's better to just kind of hold off and wait. So I think, as always, the key is to wait for prices to come into your level, have some patience, have some caution. If you've got any questions, as always, shoot us an email, support@tradersarmy.com. Thank you guys so much for joining us today, and I will, tomorrow we will not have a daily market commentary. Mr. Justin Krebs is hosting our live trade room tomorrow morning, so if you are a subscriber, then join us in the live trade room tomorrow morning. If you're not a subscriber, go to tradersarmy.com today, use the promo code TRADER60 to get 60% off your first month so that you can see what it's like in our Traders Army live trade rooms. I look forward to talking to you soon. Have a great day. I'll see you.